Good morning. You're watching Market Cafe on ET Now. I'm Shreyansi Singh and this is Snehi Shah. And over the next 1 hour or so, we will take you through all the action across the globe and within the country. We're all geared up for Diwali and we hope that you are too. But Snehi, let's get started by looking at the US markets. What is the handover that you're seeing coming in from there?
Absolutely, Shreyansi. So not very nice when it comes to the US markets then. Good morning, and let's start by looking at the global handover and talk about the US markets. S&P 500 futures were little changed Thursday night after the broad market index ended an 8-day run of gains. Now during Thursday's trading, the S&P 500 slipped 0.8% and snapped its longest winning streak since 2021. Nasdaq too declined by almost 1%, ending in a 9-day string of wins. It's also its lengthiest run of gains in the last 2 years, so that rally has also come down to an end. The 30-stock Dow has also dropped nearly 0.7%. So stocks sold off after Fed Chair Powell said that the central bank is not confident it has done enough in its battle against inflation. So after that commentary, bond yields also moved higher as stocks fell on the back of that speech. The 10-year treasury was up by 13 bips at 4.636. This after we saw respite coming in the bond yields in the last 2 days. As the week winds down, the S&P 500 and the Dow are poised for modest losses of 0.3% and 0.5% respectively. The Nasdaq, although, has a modest gain of 0.3% week to date. So on a weekly basis, S&P and Dow are down. Nasdaq just holding on to the positive. So let's see how the last trading day of this week pans out for the US markets. In the world of economic data on Friday, the market will be looking towards November's preliminary consumer sentiment data for insights on the health of the consumer. So while this is what the US markets largely look like, not much happening over there. In fact, you've seen all three indices ending their winning streak so far. But Shreyansi, take us through what crude has done.
Yeah, absolutely. So when you look at the Brent crude, that finished over that 80 a barrel mark. And you did have demand concerns in the market and a wading war risk premium triggering a sell-off earlier this week. So late in Thursday's trading session, you did have comments by US Federal Reserve's chairman indicating a possible future interest rate increase, and those shook stocks and the crude oil market hopes for strong demand. But what are you looking at in terms of the events that you should keep on your radar?
Absolutely. Let's also take a look at events then. When it comes to global cues, you've got the India industrial production data coming out today, the very important UK GDP data, as well as the Eurozone consumer price index as the inflation data is also coming out today. So keep an eye out for all of those. Shifting focus back home, let's take a stock of the earnings that we have today. Among the Nifty 50, you've got Hindalco, Coal India, M&M, as well as ONGC. All of these companies will be reporting their quarter 2 numbers today. So keep an eye out all of these stocks also in today's trading session. When it comes to the corporate action, then you've got Fusion Micro. The lock-in period will end for this stock today. All cargo logistics also will be in focus because the board is going to meet to mull the issue of bonus shares today. So on the back of that, all cargo logistics will also be in focus today. And shifting focus to the primary markets, and where we've seen a lot of action happening in the last few days, ESAF SFB, that's ESAF Small Finance Bank, will be listing on D Street today. So we will be having a new kid on the block today. Let's see how the listing goes for that one.
Switching focus to some somber news coming in from the Israel and Gaza Strip. Israel's bombardment of the Gaza Strip continues as its ground forces push deeper into urban areas. US confirms that Israel has agreed to daily 4-hour military pauses in northern Gaza for humanitarian purposes, even as President Joe Biden said there was no chance of a full ceasefire. Remember, Biden has been pressing Israeli Prime Minister Benjamin Netanyahu for longer breaks in the fighting after more than a month of war sparked by the October 7 attacks by Hamas. So far, over 10,800 Palestinians have been killed in Israeli attacks since the war began.
Biggest cue that stirred a sell-off on Wall Street, Fed Chair Powell's commentary. Speaking a little over a week after the FOMC held rates, he said that the committee is encouraged by the slowing pace of inflation, but are unsure if they have done enough to keep the momentum going.
Commentary then from the Federal Reserve. The Richmond Fed President Thomas Barkin has in fact said that while there's been real progress on inflation, he's still unsure if the US Central Bank will need to push its policy rate higher to finish the job.
Shifting focus to China then, the Commercial Bank of China has suffered a ransomware attack. Limited disruption was found in the trades in the US Treasury market. Meanwhile, ICBC in a statement said that a ransomware attack resulted in disruption to certain systems and it was conducting an investigation and progressing its recovery efforts.
And Moody's have retained India's economic growth at 6.7% for 2023, citing the country's remarkable resilience amid a global slowdown buoyed by solid domestic demand. Meanwhile, the rating agency in its global macro outlook for 2024 to 25 report said India, along with other emerging market economies like Brazil, Mexico and Indonesia, are well positioned to capture a greater share of global trade flows.
Well, all eyes will be on the 2+2 dialogue today as US Secretary of State Antony Blinken has arrived in the national capital to co-chair the 5th India 2+2 ministerial dialogue. Blinken's visit expected to give a further boost to India-US comprehensive global strategic partnership. My colleague Sumita Karir has more details about what's on the agenda for this dialogue.
India 2+2 ministerial dialogue is on today and we'll see Defence Minister Shri Rajnath Singh and Minister of External Affairs Dr. S. J. Shankar hold discussions with the US counterparts, that is the US Secretary of State Antony Blinken and Secretary of Defence Lloyd Austin. The 2+2 format's focus will be on critical strategic and defence issues, on how defence collaboration between the two nations can be strengthened, exploring emerging technologies, and will even address space-related matters including people-to-people ties. In fact, there will be bilateral meetings too to reaffirm that partnership. In fact, some of those meetings are already on according to schedule. Bilateral between EAM and Blinken was to happen early in the morning, and then from 10 a.m. to 12:30 p.m. a ministerial meeting. 2+2 ministerial meeting will happen. Then at 1 p.m. a joint press conference will happen. At 2 p.m. a bilateral between Austin and Rajnath Singh will happen. So let's understand what the outcomes of or what could be discussed. Well, these talks are happening on the backdrop of a major development, which is that of the United States investing $500 million to develop a port by the Adani Group in Colombo to counter China. So talks will focus on cooperation, like I said earlier, in the space of defense. The current focus is on technology, military technology transfer and co-production. In fact, the initiative on critical and emerging technology, or ICET, is expected to be on the cards as well, on agenda as well. Discussions around Indo-Pacific could also be discussed, keeping in mind that context. Secondly, the other important backdrop and more prominent one is that of regional issues and new international conflicts playing out. Besides the Ukraine and Russia war, now the Israel-Hamas Middle Eastern conflict. So those issues could be discussed as well. In fact, especially the Middle Eastern conflict, as MEA spokesperson stated yesterday that all regional developments will be discussed. Now, the key third thing to note is that these talks assume even more importance as Mr. Biden and Mr. Xi Jinping are expected to meet on the sidelines of the APEC summit in San Francisco next week. Remember, the first 2+2 dialogue started in 2018 between India and the United States during the times of former US President Donald Trump, and its launch was described as a reflection of the shared commitment by India and US to promote synergy and their diplomatic and security efforts. So all eyes on those crucial meetings playing out today.
All right, Samita, thanks for all those details. All eyes will be on this dialogue today. We'll slip into a short break, but as we step into a new Samvat, ET now brings you a whole host of market insights to decode what's in store for the new year. So this Diwali, get ready, taiyar hokar aaiye, and stay tuned for a very special programming.
Welcome back. Thank you so much for staying tuned in. Let's switch gears to looking at data coming in from the AMFI now. And AMFI's latest report says that small cap and mid cap stocks have continued strong inflows for 9 months in a row. And equity inflows have reached their 2-month high. Let's go across to Sharad Dubey, who's standing by with more details. Sharad?
Well, the month of October has been very strong for the retail, and the SIP numbers have come at their lifetime high levels, roughly 17,000 odd crore rupees to be precise, almost 16,928 crores of monthly inflows was recorded. Now this is of course coming second time the numbers is coming above the 16,000 crore mark. Even if you look at the flows, the overall flows, they have been on the positive side, roughly 80,000 odd crores of flows coming in, and of course this is aided by the liquid funds in the debt category. Even if you look at the equity segment, that has also performed very strong, and of course this is up almost 32nd straight month and also at a 2-month high levels. Now also if you look at it, the overall flows, they have also come in at 4-month high levels, but strong inflows coming in the mid cap and the small cap segment for the 9th straight month. And if you look at the small cap space, the funds, the inflows which have come is roughly 4,500 odd crore rupees. There are other schemes also where strong inflows have been reported, and these include sectoral and flexi cap schemes. And after 5 months of outflows, the large cap funds have finally seen the inflows. Also apart from this, the arbitrage funds, if you look at it, for the 7th straight month there has been inflows, and also the overall AUM as well as the equity AUM are still at the near lifetime high levels. NFOs, if you look at it, the new fund offers, the roughly 3,638 crores of new fund offer raise has been there out of the total of 14 schemes launched in the month of October. But overall a very strong number coming in, and retail participation has been very strong when it comes to the SIP.
Thanks, Sharad, so much for that quick roundup on the latest SIP data. But we also caught up with AMFI Chief NS Venkatesh on the SIP hitting the record high levels. Here's what he had to tell us. Listen in.
The investor confidence is very high, I would say. Essentially, they have reposed trust in the SIP as an investment vehicle for investing into the mutual funds. And continuously, we have been seeing month on month, somewhere around 600 to 700 crores increase. This month also, if you look at it, it's around 800 crores increase. We had thought that the 17,000 crore we will achieve by November, but we have already achieved it in October itself. So going ahead with this hit rate, we believe that the SIP book should grow pretty fast, and we should see the 20,000 mark at least by February, March.
Well, switching gears to crude now, government believes that crude prices going below $80 is not an indicator of price softening. ET now is told by sources that geopolitical situations cannot be ignored, and if demand from China increases, volatility in prices will remain. My colleague Prakash Priyadarshi has more details. Prakash?
Yes, our sources in the oil ministry are saying that the crude oil prices going below $80 per barrel is a very positive development for a big consuming nation like India. But the sources are also saying that uncertainties remain there in global market on back of complex geopolitical situation. Sources are saying that they cannot discount the impact of war in Middle East at this point of time. Therefore, it is important to be on wait and watch mode and to see a movement in the prices going forward. Various factors are playing its role. Volatility remain there, and it is likely to determine prices going forward. Sources are also saying that when it comes to a demand supply situation, there is a possibility that the Chinese economy may bounce back and demand of crude oil is expected to grow further. When it comes to oil marketing companies and a possibility to cut retail prices in domestic market, sources are saying that oil marketing companies are still facing under recovery. In fact, under recovery on diesel is around ₹6 per litre. However, there is no such under recovery on sale of petrol. Therefore, government is not in a hurry. In fact, it is on wait and watch mode for now. And crude oil prices anywhere between $65 to $70 per barrel is something which will be good for the Indian economy going forward.
Thanks, Prakash, for all of those details. Let's shift focus and talk about Uber, because cab aggregator Uber has written to Delhi government urging a rethink on decision to ban certain cabs entering Delhi from neighbouring states. Let's go across to my colleague Sameer Dikshit to get more details on this happening. Sameer.
So amid the dangerous pollution level in Delhi, we have seen that the Delhi government has announced that they are going to ban the entry of non-Delhi registered commercial cabs booked through cab aggregators like Ola, Uber or any other taxi aggregator in the coming days. Delhi Environment Minister Gopal Rai has announced that only Delhi registered commercial cabs will be allowed to ply in the national capital Delhi. And after this, Uber, which is a major cab aggregator, has written a letter to the Delhi Transportation Department and has mentioned that their 70,000 car fleet or the bike that they are having. Now, these 70,000 car fleet that is running in Delhi NCR region runs on clean energy fuel like the CNG or even the electric cars they have. And in the same context, they have urged the Delhi government to relook into their decision to ban the entry of Delhi registered commercial cabs. This is in the context that the Delhi government has also announced that they are going to implement the odd even vehicle rationing scheme from 13th to 20th November, that is for 1 week. But having said that, this odd even scheme will be implemented after there is a clear-cut direction from the Supreme Court. But as of now, there is a proposed ban by the Delhi government on the on non-Delhi registered commercial cabs, that it will not be allowed to fly in the national capital. And in the same context, Uber has written a letter to Delhi government to really look into this entire case, because their fleet runs on CNG or even on electric vehicle they have, and this means that these fleet will help in reducing the pollution level and also help the people to commute from private vehicles to a commercial cab.
Well, thanks, Amir, for those details. But let's switch our focus to the yellow metal now, and a handsome 20% return in a single year and a stellar 90% return in a 5-year period. Well, gold prices have almost doubled since 2013, and my colleague Srishti is here to get you all the details on various instruments available for buying gold.
Well, yes, it's Diwali, and this is the auspicious time where people look out to make the investments and purchases in gold, because earlier it was the option of go ahead and buy the physical gold. Physical gold definitely has that emotional connect, especially in India, but it also involves making charges. There are risk of theft, as well as it involves a storage cost. But now you have the golden opportunity in a lot of ways, where there are plethora of options where you can go ahead and make investments in gold and actually get to trade on that as well. First of all, let's talk about sovereign gold bonds. Sovereign gold bonds, like the name suggests, is a bond that is being offered by the government, and the government actually comes in various tranches where you can go ahead and make the investments directly over there. And the major positive is that you just don't get the exposure to the gold, but you also get to have the interest of 2.5% on a fixed basis per annum, and this is being paid on a 6-month basis. The minimum investment is on 1 gram, and the maximum you can buy in any financial year is of 4 kgs. Other than that, if we talk about, then it has a 10-year period. This bond is actually of 8 years, but after 5 years you have the option of opting out of this particular bond. So this is the first way where you can go ahead and invest in gold. The other way is gold ETF, that is exchange traded funds. All you need is demat account where you can go ahead and not just buy the gold ETF and get to trade on that. And lastly, there are a lot of fund houses that are coming up with gold funds. This includes asset management as well as brokerage fees. So these are the options where this Diwali you can go ahead and make the investments and purchases of gold.
Alright, thanks Shrishti for all of those details. What better day than today, which is Dhanteras, to talk about gold, right? But as we step into a new Samvat, ET now brings you a whole host of market insights to decode what's next to come in the new year. So this Diwali, be ready, taiyar hoke aaiye, and stay tuned for a very special programming.
Welcome back. Thank you so much for staying tuned in. Let's switch focus to M&M now. M&M is all set to report its Q2 results. Let's go across to Srishti Sharma, who's standing by to understand what the street is penciling in for this counter. Good morning, Srishti. Help us understand this better.
Well, yes, M&M is the counter that is in focus on the back of the earnings, definitely soaring in trade. And this particular, from this, we are expecting a jump of almost 5% on a quarter-on-quarter basis at 25,172 crores is the expectation. EBITDA is expected to be just flat at 3,251 crores, while the margins expected at 12.9%. But the key to watch out will be the margins, because last time also I remember in Q1 the company did surprise on the margin front. And lastly, onto the profit figure, 2,900 crores is what we are expecting, a jump of almost 4.5%. The auto segment performance has done well in terms of volume. We have seen a jump of 14%, but that was the lagging factor this time will once again be the tractor division, which has seen a fall of 22% sequentially. So because of this mix, we are expecting the margins to see a little bit of decline on a sequential basis. But lastly, going ahead as we go across the festive season as well as the elections upcoming, what is the outlook on the tractor demand? That will be the key to watch out for M&M.
Alright, Shrishti, thanks so much for all of those details. M&M will be in focus on the back of that. But another company that will be reporting its Q2 numbers today is Coal India. So let's go across to my colleague Ashesha to understand what we can expect from the numbers and what are the factors to watch out for when it comes to Coal India. So Ashesha, good morning and break it up for us.
Well, yes, we are expecting muted set of numbers from Coal India on a sequential basis, although on a year-on-year basis, we are expecting some amount of growth on the top line. As far as numbers are concerned, consolidated revenues could come in at about 31,800 crores, which will be an uptick of about 7% on a year-on-year basis. Margins, meanwhile, are expected to contract as much as 100 basis points. We are expecting consolidated margins to come in at 23.4% versus 24.4% that the company had reported same time last year. As far as e-auction volumes and realizations are concerned, e-auction volumes are expected to rise by about 45% on a year-on-year basis, but e-auction realizations, they are expected to contract by as much as 52% on a year-on-year basis, and hence we are expected to see some amount of impact on the top line and on the bottom line as far as e-auction realizations are concerned. As far as key monitorables are concerned, production guidance for the third quarter and for the full year FY24, e-auction premium and volume guidance for the second half of the year, and what the outlook is with respect to FSA prices and demand and domestic demand will also be some of the key monitorables. But all in all, on a sequential basis, we are expecting muted set, although on a year-on-year basis, margin contraction and some amount of 7% top line growth is what we are expecting.
Shesha, so that's about Coal India, but help us understand what Hindalco is also set to report.
Well, yes, lower LME prices are likely to be offset by lower cost of production that the company enjoyed in the quarter gone by. Remember, cost of production declined by as much as 5 to 7% on a sequential basis, and LME prices also declined in the quarter gone by, so that will be offset by each other. Copper division, meanwhile, is expected to report strong performance this time on account of strong demand and strong prices in the quarter gone by. Standalone numbers, revenues are expected to come in at about 19,840 crores, which will be flat on a sequential basis. Margins, meanwhile, are expected to expand. We are expecting standalone margins to come in at 10% versus 7.8% that the company had reported in the previous quarter. Remember, these are standalone figures. Novelis already reported its numbers a couple of days ago, and it reported very strong set of numbers. EBITDA per ton has already crossed that $500 per ton mark in the second quarter itself, and they had guided that it will cross that $500 per ton mark in the fourth quarter. So Novelis did report very strong set of numbers. Demand from across the board also continued to remain very strong, and we are expecting good set of numbers from standalone Hindalco numbers as well, which will be reporting its numbers today.
Alright, Ashesha, so Hindalco also will be in focus on the back of that. A lot of stocks in focus on the back of their Q2 numbers, but apart from all of these stocks, take us through a list of all the other counters that could be potential buzzers in today's trading session as well.
Yes, let's start off with Aurobindo Pharma. Very strong set of numbers that the company has reported, where revenues have seen an uptick of a solid 26% on a year-on-year basis. Margins have also expanded. They've come in at 19% versus 13.8%. So good 600 basis point margin expansion is what the company has reported. Strong set of numbers. Aurobindo Pharma will be in focus today. Also keep an eye out on Lupin. Remember, the stock was in focus yesterday as well on the back of its numbers that it reported day before yesterday. Some important takeaways have come in with respect to its con call, where the company said that they expect EBIT margins to be in that 18% range for the second half of the year as well. As far as US business is concerned, they said that it should sustain $200 million per ton quarterly run rate for the coming quarters. Fusion Microfinance will also be in focus, and that is because nearly 48% of the equity which was locked in will now be open for sales. Perhaps some selling pressure will be seen on this counter, so keep an eye out on Fusion Microfinance also. Orient Cement, again an earnings candidate, and very strong set of numbers from Orient Cement as well, where revenues are up 17%. Company has reported a profit of about 25 crores versus a loss of 9.5 crores same time last year. So company has reported profit versus a loss. So good bottom line performance. This counter will also be in focus today. Apart from this, Garden Reach, on account of an order win, where the company said that they won order worth about 840 crores for a research vessel. So on account of this order win, keep an eye out on Garden Reach Shipbuilders as well. Force Motors, another earnings candidate, and very strong set of numbers over here as well, where revenues are up 42.5% on a year-on-year basis, and net profit has come in at 94 crores versus a profit of just 19 crores that the company had reported same time last year. So strong bottom line performance is what the company has reported. Force Motors will be in focus on account of that. Lastly, let's talk about Mahindra Lifespaces. Remember, in 2021, the company had said that they had finalized terms of a joint redevelopment project in MMR region in Dahisar, and now it will not go through. So perhaps some negative has come in. Mahindra Lifespaces, on account of this news flow, will be in focus.
Well, thanks, Ashesha. We'll definitely be keeping an eye on those counters, but another counter that we would be keeping an eye on is Eicher Motors. Now, that one is all set to report its numbers, and when you look at the revenue, it's expected to get a little bit better, and same can be said about the EBITDA. Now, when you look at margins, they're set to expand to about 26.1% compared to 23.4%, and profit is also set to increase to 942 crores versus 657 crores. Now, when you look at the volumes, you've got the year-on-year volumes for RE segment that are set to rise by 10.4% and VECV by 11%. Now, in terms of key RE volume triggers, you've got Hunter traction as well as easing supply challenges that would remain in focus for the RE volume. Now, when you're looking at other things that you should be keeping an eye out for Eicher Motors, you've got PE exports volumes that would be in focus. And in terms of what will be aiding the product mix, now you've got lower raw material costs and operating leverage at the same time. So those would be key for the product mix. Now, when you look at what you could also track, you've got the RE EBITDA and margin that will likely remain flat quarter on quarter. And when you look at VECV margin, that will likely improve year on year as well as quarter on quarter. So in terms of other things that to sum up to keep an eye on, you would have the product launch timeline that would be in the spotlight as well as the market share outlook. So all in all, that is what you should keep an eye on when you're looking at Eicher Motors later today.
All right. So, Eicher Motors also in focus on the back of that. Another company, let's look at Piramal Enterprises that declared its quarter two numbers today, and we are getting a rather mixed bag, pardon me, coming from Piramal Enterprises. Let's take a snapshot of how their second quarter has looked, and net interest income has come in at 739 crore versus a figure of 841 crore last year. So, that's down 12% on an annualized basis. Calculated PPOP has, however, seen an uptick. It's come in at 491 crore versus 402 crore reported same quarter last year, and profit after tax at rupees 48 crore versus loss of 1536 crore. So, well, that's the snapshot coming in from Piramal. They're on track to achieve their FY28 goals, and they're saying that remarkable progress is being made towards status objectives. But let's also go across to Vamakshi, who's joining in with more details on this.
So Q2 was a rather mixed bag for Piramal Enterprises. Yes, the company reported a very strong growth in the AUM. The PPOP was also higher than expected, but the net profit was a miss. Now let me quickly take you through all the numbers. The company did report robust AUM growth in some of their key focus areas. The total AUM saw an uptick of almost 5% on a year-on-year basis and now stands at around 66,900 odd crores. Retail disbursements were up 57.2%, but this was below estimate because the management consciously slowed down its unsecured disbursement. The company continued to accelerate the rundown of its wholesale 1.0 book with nearly 8% sequential decline, while wholesale 2.0 reported a strong growth of almost 48% sequentially. Apart from that, when we look at the net interest margins, they've also expanded sequentially to 4.7%, and this was mainly driven by an uptick in the wholesale yields. NII, however, saw a downtick of almost 12.1% on a year-on-year basis. Now, when we look at the calculated PPOP as per MK, it stands at 491 odd crores, an uptick of almost 22% is what we're noting here. But the PPOP was largely a beat driven by higher than estimated other income as well as lower expenses. But like I mentioned before, the net profit was a miss, and that was mainly on account for one-offs as well as refund settlement towards the subsidiary. And but nevertheless, the company managed to report a profit of almost 48 crores versus a loss of almost 1500 crores in the same quarter last year. In fact, the company also highlighted that they are on track to achieve their FY28 goals, that they are making remarkable progress towards them as well. And in fact, we have a note coming in from Jefferies. They have maintained their underperform rating, cut their target price to 855 rupees per share, highlighting that there was a slight miss in the NII, but nevertheless they noted very strong growth in retail, growth in unsecured loans moderated, stable asset quality, and the credit cost surprised negatively. So all in all, a mixed quarter from Piramal Enterprises, and that is the reason you should keep an eye out on this counter.
Well, thank you so much, Kamakshi. We'll definitely be keeping an eye on Piramal Enterprises. But switching gears to cricket now, World Cup semi-final tickets are selling at 3 to 4 lakh per ticket in the grey markets. ET now has learned from sources that with one semi-final between South Africa and Australia almost finalized, and if Pakistan qualifies to fight against India, ticket rates at grey market may further go up. Ankur Mishra is standing by with more details. Ankur, what are you picking up?
Yes, there is a huge rush for buying any of the semi-final tickets. I am standing right outside Wankhede Stadium, where many of the fans still want a ticket, but it is not available. The reason is simple. The tickets are already sold out. If you go to the official ticketing partner bookmyshow.com, you will see that there are no tickets available. Even the physical ticket got sold out a long time back. So what are the options now? How should you buy tickets? Yes, it is available, but it is available either at online marketplaces or in grey market, where you get the already purchased tickets, and in resale the prices are exorbitant. If I give you a glimpse, the tickets are costing as high as rupees 4 lakhs. If you want a ticket at Sunil Gavaskar Pavilion, it will cost you somewhere between rupees 2 lakh to 4 lakhs. Similarly, MCA Pavilion ticket is costing around rupees 2 lakhs. If you want a middle tier at Wankhede, it is around rupees 1.5 lakh. Similarly, Sachin Tendulkar stand tickets are available at somewhere between rupees 60,000 to 70,000, and you will not be surprised that cheapest tickets available are nothing less than rupees 50,000. This is the scenario not only in Mumbai but in Kolkata as well. The tickets are already sold out for the second semi-final, which is going to be held on 16th of November. But the prices are little less, and it is somewhere below rupees 10,000 to begin with. But all in all, legally, in the normal course of scenario, there are no tickets available. The only way to get it is grey market.
Alright, thanks Ankur for all of those details. But as a part of our special Diwali programming, we caught up with Ramdev Agarwal, chairman and co-founder of Motilal Oswal Financial Services, and he spoke to us about the premiumization trends that he is observing in the current market setup. So let's listen in to what he had to say.
You know, the other thing we were talking about in office as well is that it's the urban India which is done well, not Bharat. 2 years back you would have, or 3 years back you would have bet on Bharat. This whole premiumization which is playing out, you know, everything from footwear category to clothing to housing, it's the aspirational Indian and premiumization, wherein urban India is the one which is giving you all the numbers. You think that will broaden at some time?
It will broaden. Otherwise, this rally will not last. Because rich guys are there because the poor are there. I can tell you this. And any country's prosperity is not determined by what the rich guys are doing. Even the bankrupt countries have billions. You know, it is how well the poor is doing. And I think our Prime Minister, the government has been extremely hell-bent on that. I mean, whether it's a movement about the toilet, whether it is movement about the Nal Pe Jal, I mean, there are huge social initiatives have been taken. That is to reach, I mean, Pradhan Mantri Awas Yojana. So these things are to benefit the bottom of the pyramid. I mean, you have 80 crore, I believe the free ration is there, and now it is being expanded for another 5 years. So literally, I mean, the food is taken care of at basic level. So I think the trickle down will maybe, I mean, we'll see in this festive season what happens. because festive season this time is slightly extended.
Yes.
There was a blip month or something. So I think December quarter will tell us whether demand for the mass consumption items. I heard something that FMCG in September, October has grown at about, in volume terms, about 8-9%. So that could be starting. It will come. It might be 6 months delayed, but it will trickle down to bottom.
Is that the contra opportunity in the near term?
It could be. I mean, we need to see, but this boom is not going to sustain if it doesn't trickle down to bottom of the pyramid.
Yeah, that's
I mean, how many, this 5% janta, how far you can take the, the whole military behind? You're just moving forward. Generals and lieutenants are moving forward and the army is behind. You can't win the war like that.
As we step into a new Samvat, ET Now brings you a whole host of market insights to decode what's in store for the new year. So this Diwali, get ready, taiyar hoke aaye, and stay tuned for a very special programming. But with this, we're timed out on this edition of Market Cafe on ET Now. Thank you so much for tuning in.